It's January 30th, 2025. Welcome to the Breakfast Club. My name is Darren Hancock, and let's get to the charts. All right, let's look at the daily. Let's just remove all this. So this little imbalance right here, I do like the fact that we came back to this volume imbalance right here. It kind of cut through candles, and you'll see there's some of the key areas here that we're finding the bodies are respecting now, the wicks are respecting it and starting to move higher. We have this imbalance above us. It's a price imbalance. We've got delivery on one side, but nothing on the other side. Volume imbalance, I don't care what you call it. But there's a definite imbalance from this candle's high to this candle's open. And then we have another one from this candle's close all the way down to this candle's open. Anywhere inside there. So it feels to me like there's more upside objective to reach for. 21.7. We've hit the high there, 21.720, and this is my whole next upside objective here. We're inside this premium portion of this range now, so here's your discount, and your premium sitting right in here. We've just hit the edge of it right there. So we're looking for 1, 2, 3 days back. We're looking for that old high, and then that little gap that's sitting there. That's my upside objective for today. So let's go back to the hourly. If that's our upside objective, we're looking for an hourly reversal. So here's the overall range reversal here. Body trades just above it right here, and then we eventually go straight through it, come all the way back down, tap into it. Run higher, reverse. That one closes below it, come back inside it. We're inside this range now, 62%. Retrace it back into the old order block breaker here. Takes out this low. Return into that. We even retap this BISI here. And then I don't see much of a reversal in here. Probably an immediate rebalance is going on. Get that out of there. Just clear up all the, remove all the drawings, start fresh here. Immediate rebalance right here. Pop above it, come back inside it. So there's your immediate rebalance. Premium array inside this piece here. You trade above it. We're back inside it. Now we're looking for this to go higher. So I wouldn't want to see a, this has been worked already. So I wouldn't want to see it retest this. I think I'd like to see that as the low. And then continue through the mean threshold of this candle. We've already broken this hourly one. I think ID posted this on the Telegram channel for us. I totally agree with you, Hadi. Totally agree with you. So if this holds price here now, and we continue to march through the mean threshold of this candle and go higher, you can use this little bullish candle here, or these two bullish candles, as support to continue going higher. Stop loss would sit just below that BISI here, aiming for that gap above us and these relative equal highs. We've got lots of liquidity up here, so that's inevitably where I'd want to reach for. And let's look at ES. A lot more choppy in here on the hourly basis. Get back above this candle and use its candle here. It's refilled all this. It's rebalanced all of that right to the pip there. That's the premium array. We've come back inside it, hit the consequent encroachment, come back one more time. You want to get through this mean threshold here and start running for those old highs. On the hourly, Dow Jones, I want to see this right here at 44,731 or 44,736. Just taking out these guys here. Just a little pop below them. Find some support here. Line in the sand is the mean threshold here. And then start to move your way back up here, running for this previous day's highs. Because you want to close above them today and start marching higher. Pre-market's even saying this is coming lower, so I'd like to see us get back down into this lower range here first before marching higher. February, the time we want to see a retracement. So this month I'm looking for a retrace back down into this discount portion of this larger range that we've been in for a while with gas. So we hit right off that mean threshold here today. Just got a tad bit more to go. We just popped down into there. That's the line in the sand if you want to come lower or you want to go higher. We've already traded below this level. We're inside this gap again. So now this line will include all of this. So basically return to this little fair value gap bar down here. Is that a weekly inversion? Yeah. We'll see if that weekly inversion holds price again. Gold I'll get to in a second. Typical, isn't it? I got out of this, been waiting for this stock to go up for years. And it finally broke my entry and gave me an opportunity to get out. So I got out at that up here, right there. And then naturally it shot up to $2. I'm glad I'm out of it though. Whatever. Watch this thing take off to $10, $20, and I'll be like, there you go. Corn, or sorry, wheat, reaching for that buy side liquidity we were outlined yesterday. We still found support off of here. Come back into this order block. I want to see if that holds now. We can get through this. We're in the mean threshold of, yeah, I don't know, that candle here. Kind of a small range. I want to see this just kick off this order block here. This bearish candle. I want to see it launch off that and start reaching for that rejection block and higher in soybeans. In sugar, we've hit the upside objective now. Now I want to see if we can, I think I've mentioned this the last couple of days, we've been hitting this objective. So we want to now continue to get on top of that now to march higher. Coffee, I'm still expecting coffee to go higher. So looking for buy side liquidity now, just above us. If we can retrace into this area here, hold price and start marching higher, I'd like to see us get back into at least the midpoint between these two. Cocoa. You want to see a portion of this stay open as a breakaway and start running for these equal highs now. You could come down to as 11,022 to 11 or 10,931. That would fill it completely. You'd want to leave just a small portion of that open. So I'd like to see 11,000. Big figure. Let's see if you get reaction off that. Corn, beautifully. Look at that nice little reverse. Come back, tapped it nicely and left, which is what we're looking for. Which one was it? We're looking for the same thing on. I guess it's similar to this one. We want to see it come back, tap, leave a portion of it open. In this case, it gave you a full fill, but the body's respected the high. Get the wick come down to the bear shorter block and then repel from there. So I'd like to see it leave from here. I don't want to see it fill. Lean piggies, we're still looking for that mean threshold there. Oil has closed yesterday below the mean threshold. So using this level here, this candle's open as support to go lower. Look for a 713, 116. What's the open of that candle? 73.15. So look right above you, 73.15. So looking for somewhere to retap into this first presentation, fair value gap on Wednesday, yesterday's candle. That would be the upside objective. And then I'll be looking for any reversal in here. So those of you who are doing oil, look for the opportunity to see a reversal in that spot and then continue lower. So now that you're breaking these highs, look for your opportunity from this point on to look for a reversal. And you've got this thing mapped out right here. That big sucker right there. This was just a fair value gap all the time we were working it. Now that you busted through it on a close, you come back into that candle. Notice how we did not retap it and went higher. You notice we didn't get this one either. We didn't get a body above that until this candle closed, and then that one got taken. So I start going to this point here. Do we retrace to this candle and then continue higher? We don't. So you see this next one. These two, or these little three candles right here, we've now traded above those. So I'm looking for support in this area right here. And this is the breaker. it sets that little, it's kind of like the parent breaker of that run. This old high has been tapped already, so if that continues to leave there without tapping this, this is all little trigger points that we've yet to get back to. So if we come to this candle's mean threshold and we go past it, like if we could take this one candle and run through all three of them, then there's a likelihood that we may even go higher. Because we've swept these lows here already. That wick just ran the lows out. So if we do run through the mean threshold of this one, look for higher prices. So I'm looking for anything that gives us support in here to come lower. Even this little imbalance we're about to hit from here to here. That's why you look for that opportunity. Now we've hit it. Now I expect to see some sort of reaction and continue going higher. Or if that's the, I don't know what the low is on that. What's the high or close on that candle is 73.24. Oh, so it's still up there yet. Yeah, still haven't got a body take out this low yet, but I do like the fact that mean threshold's gone, so I'm looking for the lows to go next. And then let's have a look at gold. Gold's got your reversal right here happening already. See that? You have a high, reverse, change in direction. Trade back into this level. We don't have a real structure break yet. Changing the price of delivery is, I think Derek was talking about on his video the other day. It's almost exactly the same setup that we have. We have the reversal, which is a fair value gap, or turtle soup, fair value gap, change in the state of delivery, or what we call break in market structure, return back into fair value gap or breaker, and then continue on the downside. It's pretty much the exact same thing we're doing every morning. So fair value gap here, return back into it, continue lower. So as you take out this side, you're looking at these, all these candles here make the breaker that comes down and takes out this low, this low. So there's your change in or smart money reversal, low risk sell. Now we're into this, I like a little distribution phase here. So I'd like to see this get back into here, create a second level, and then start to drive it down to a unicorn trade. So right back up into that fair value gap here, also into this fair value gap here, perfect fill of that, and then a continuation on the downside. Bitcoin. This is the hourly on Bitcoin from yesterday, 2 days ago. Was this Monday? Reversal, break in structure, fair value gap, breaker, return to the breaker. It's exactly the same setup. So, or this inversion, back into this breaker, its mean threshold even holds price. run, take out your highs, reverse, return back into the inversion, looking for higher prices. We're looking for this level here to get taken. It does right here, and you come back. We're best banging around inside it now. So I want to see this hold, and then run back up through these candles, and then march higher. You're looking for 106, 106, 166. Disney took out the highs. Okay, so we're back through this level. We're using it now for support to get back deeper into this range. So you're 50%, you're back into this order block here, and this breaker, you're catching the top of it here, and there's a gap obviously below you here. We have a nice reaction off the breakers open, and then you got to see it get back above 113. Oh, it's there you go, 113.75. It's gapped up again. So the simple retracement back into the breaker, or 50% of that range or more. You pull that range there, you'll see that that's there's 50% there. We dip right down into 70% optimal trade entry, and now we're gapping higher. I like it. So far, Craig's enjoying a nice little Disney run. This is a continuation to the upside now. I want to see it get through that little fair value gap here. So it's opening right on 113.75. You want to see it continue to march up higher through 113.88 on a close. Get through this mean threshold, which is also the consequent encroachment of this larger fair value gap or inversion, and then find support at that and keep running the rest of this box out here. Look at that, Barclays just marching up. Gary gave me this Barclays a few like last week. It's already up 10% already. Yeah, we're eating our way through here, so this downside for Laurentian. AMD. Craig's ICAD just marching away there too. Nice. I want to see this next price leg continue here. You see this start getting up above these equal highs. This is the short term, then the equal highs above you here. I do like this right here, upside. That's my next upside objective there. Finding some support off this. I want to see this stay open here now. I want to see this continue to march higher, get through this mean threshold, this candle, and then start taking out the highs, filling that fair value gap, and start getting back into this bullish order block. Japanese yen, you want to see that continue to march higher now, get into this order block. So this Japanese yen is accomplishing what we want to see British pound do now. See this order block here. I want to see that kind of objective here. You work through, or sorry, your New Zealand dollar. See how it's worked this whole consolidation here. Consolidation came down, hit it. Now you want to see it break up and fill in that fair value gap, which is right this whole down type run that we had here. So this is where I want to start seeing this accelerate here for Aussie dollar and New Zealand dollar. Oh, look at this. Look at this. This is when you sit there and cheer. I knew it was going to happen. That's right. Isn't that where you just go, I knew it. I saw it coming. Here's your reversal. This is the constant bashing around off this fair value gap. We have a premium objective for our silver. Pre-market's at 26. It's right on the consequent encroachment of that premium. So as soon as that puppy opens up, we're going to hit our premium and we're going to dance the Jenga. Like, finally. Now, anybody could have said, yeah, well, anybody could have called that. All right. I still wanted it. There's your box to box finally in silver. How many days did that take? Almost 2 weeks of trading before it finally got back up there. But alas, the box to box has worked again. Unless the pre-market ends up dropping or it actually starts in 2 minutes. I cannot worry about those ones. So let's get back to here. So we've retraced all the way back down inside this hourly again, and we're getting a nice reaction. See how the bodies are respecting the consequent encroachment of that? I really want to see that start marching higher now. Start taking out these highs and using these candles to go higher. Let's say hello to everybody. What are you all doing this morning? Let's get in here. There we are. 21. Look at you guys all in here. D, good morning. Craig, Russell, Silver Rocketing. Yes, indeed. Campione. Good morning. Paulette, how are you? Craig, love Disney. 16 is my goal for earnings next Wednesday. Inside day. Smaller range than yesterday. Parasitic to the visual trend. Trend line. Love that. Oops. I'm on the ES. I'm not buying CAD here. I only sell rallies. And the Lone Ranger said, "Hi ho, silver." Good morning, Curryfish. So begins the 7:30 or 9:30 little shenanigans. You have my permission to leave now. Let's go. That you never do, never do. So if we're doing a box-to-box run, first one, that's the second one. So we could say that's the upside objective to start. So 22,000 big figure, and then see how we act through each one of those, and look for mean threshold, and then run for the equal highs. I'm going to take that one as a run from there. Stop loss will sit right here. I'm just looking at this rebalance. I want to be just below that rebalance there. 50% of that range. Puts me back in this little tiny order block here. So if we run this, that's going to be my, yeah, I don't want to see that break that actually. This was ideally where you want to see it freeze up on here. Bodies respect that. May get a bit more wick action. Mean threshold of that wick. I wouldn't want to see that get taken, which is also the bottom of the BISI here. So we'll see how that acts. So far, it's meeting all the rules for. We have a body that trades above this high. Expect to see a retracement back into here. Our stop loss is placed below this immediate rebalance. So far it's following whatever rules we've established. If it not breaks this on the downside, on a close, I'll close that out before it hits my stop, because then we're coming back into this range here. And then I'm looking for an acceleration through here. That for me, there's no reason why it should come back down into here. But if we close below this level right here and come back into it, then we should see a quick acceleration through this. And I don't see why we should get down there, but anyway, that's the how I'm looking at it. So if I'm wrong, it'll come back and get me real quick. But I'm following basically our rules set up. We've broken this range extent. We've had a range extension. We don't have a reversal in here except for here. So if I see something break through that and come back into it, then that's the reversal that we have to come back. And there's nothing down in here that really supports anything. This has all been worked, so that I would expect it to accelerate quite quickly through here. When these guys do this crap. They try to piggyback on your channel and promote some ripping people off crap. I'm constantly pulling them off my channel. So mean threshold of that wick still hold. This is all good. I want to still see this hold. Wicks do damage. On the lower time frame, 1 hour, or sorry, the 1 minute. You see how we ran these lows out here? Now we're looking to march higher. There's our initial presentation. Talk about a box to box. Here's your premium box. Here's your discount box. You ran right up into it twice, came down to the discount box. Now you want to see it run through here. Take this lot out. Can you check oil? Yes, indeed, ma'am, I can. So we have, we're looking for this run up into that, remember 73, we're calling for 73.20. I'm looking at 73.13, 73, like I'm looking for whatever this open is here. 73.15, so 73.15. And this, we talked about this Wednesday initial fair value gap. So if we see it, we're looking for any opportunity. Remember us mentioning as we get above this breaker, see how we came back, found support right at it. That's a march higher. So there's your long. just looking for not that we'd actually want this right here as a long, but if this is the retracement back into here, I'm looking for 73.15 to this initial presentation fair value gap on Wednesday. And then you wait. You're just looking for any opportunity now to catch a reversal. So you see this first presentation, but we did not get a break in structure down here. So 703, what's the high of this candle? Or the close of that candle, 724. So it's actually higher than this. What's the low of that candle? 72.93. So that's up in this area right here. So we're just hitting the bottom of this candle. I'd like to see it just pop up a little higher. But wait for a reversal. If you see a reversal with a break in market structure to the downside, then you can start aiming for this stuff down here. And your line in the sand would be like mean threshold up here, which is 73.44. So here's your, you want to see body get below here, and it looks like it's just below there now. Look for a run back up into that initial presentation fair value gap, and then you want to see it come lower, get through this one here. That's the big pop through. Got an imbalance right there. So now I want to see it, watch carefully now just to see how that acts off of here. Forget you got your 15 more minutes. I want to see a nice body get through here. Not just this little, does it barely make it through? Let's give us a good displacement candle. And it's not really a break in structure here. I want to see like a nice swing low taken out. This just looks like it's a consolidation area happening. Let's just say that one's nice. I like that initial presentation. But let's see this sucker right here give way. And again, it doesn't matter if you miss a big chunk of it. Wait for more certainty to come your way. Break through here, break a body below here, and use these as support. So if we get smart money reversal, low risk sell, look for a drop back in here, accumulation back into the order block, or this cluster again for like a CAM model 1 entry, continuation. But I still want to see something above here. I want to see this thing get hit, the body, where it's open, I should say. That would take out, there you go. That'll be your new day opening gap. You're aiming for 128. And let me put in here. Well, Abs, I don't know if Abs is in here yet. Good morning, Chris. Got a body above here still. I'm here. Abs is here. Mark your candle, Abs. See how it's bouncing. Wow. So don't jump on anything in here, Paula. I shouldn't say don't. Do what you want. I gotta stop thinking that I'm giving advice here. I don't want to give advice. I just want to tell you what I'm looking at. I myself looking at this as a consolidation on a 1 minute chart. Nothing in here for a clean setup yet. Yeah, it's reversed off this. We've gone through it. We've gone through it. We've gone through it. We've gone through it. So wait for this whole area to get broken out of. So I want to see this get taken on the downside and these two candles here as a break in structure. I guess technically this would all be, so if you have a nice displacement candle right through here and we have a candle retracing back into here, that'd be awesome. You'd love to see that. And meanwhile, back at the ranch, I'm moving my stop loss into pay for my trade now. Where is my stop loss? Here. I'm moving that to here. So now it becomes a zero stress trade. I'm going to make sure my other ones are all. Where's my other one here? That's what I want. Can you feel it? Now I'm going to go to here, lock in some profit. Lock in some profit on all this. Now, I'm just going to try and trade this with you guys. Did you see that last touch and say goodbye? I did. I did. I've got it. I've got it marked out on my chart. It did. I'm fighting. Chris, do not trade this. Fear of missing out. Do not trade this. This is the stuff you journal entry. You take your charts right now, and I want you to screen capture this, and I want you to look at that loss, and you say to yourself, I don't care. Isn't it great? Focus on the trade. Focus on the setup that we talked about on the hourly. Focus on that, and then just go, this is what happens when you focus on rules. We said, you heard me saying when this chart was sitting at the hourly level here, and I was saying it's followed the rules, it's broken above the high, it's come back to this level. My stop loss, my fear was this imbalance back here. My stop loss was sitting here, and I talked about if it drops below this level, I don't want to see that on a close. And then, so I had my narrative, I had my trade plan set up. I had the rules, so you follow the rules, and then as soon as you start breaking that high, move yourself into yourself into some profit. Follow the rules, man. That's all you got to do. Don't worry about this fear of missing out. You need to put that down in your journal entry. You need to put that in your journal entry, because what you're feeling right now is so important. It tells me that there's that adrenaline rush that need to get a fix. And that's gambling, man. You got to get that under control, or you're going to miss out, and you're going to be the one that gets your price taken. If that was you expecting to see higher and it rip back against you, you have a narrative that says, if I'm wrong, this is what I expect to see. Now this could come all the way back into this candle here. But if you look at the 1 minute chart, see how there's, now it's just taking me out there. There's the reversal. So if we close below that, I'm looking for a run back into here. I'll take 50% of the retracement back into this range. So I'm out of everything now. That was my upside objective, but that doesn't mean we're not going to reach it. We've got a reverse situation happening here. So looking for 50% of the return in this range here. And Chris, do not hit that damn trade button. Just watch. Screen capture it. You're learning more out of this, your psychological response, than you are with trying to feel the rush, the need to get a fix. Seriously. But you don't want to take that advice, that's fine. So you see how it broke that? That's my fail-safe, was right here. I don't want to see it come back through that. If it does, then it's taking me out. Now we're back inside that range, hitting 50%. Old high. We just pop into here. I'd like to see it dig down into here a bit more. 62% would be a really nice retracement, or a fill of this. Leave this one open. So what's your trade plan in here, or are you just chasing price here, Chris? So if you got that emotional thing, don't even think about trading right now. Don't even think about hitting that button, because I know you've got the urge to keep hitting the button. But don't. Just watch and say, now, if I see this nice good displacement here, okay, we had a nice little march up, and then all of a sudden it comes back to 50%, nails the 50% right there. Now you're looking to say, where would I get back in? If I want to get back in line, in sync with the market, and I'm waiting for my next price leg to continue, where is it? And that ends up putting us right back through the rest of this. Where do I want to get in? So you're not going to miss out. You're just looking for the next opportunity to get in. And if you're panicking, if you got your heart's racing right now because of this, you've been given a major sign there. Screen capture that and just put, I'm addicted to adrenaline. I saw what they've showed me there for the setup. Here's your reversal, take out that low. You came right back inside it here. Continuation to the upside. I was trading it on the hourly. So the 1 minute gave you a better setup than my hourly did. So now you're looking to see if it breaks through here. On a close. Look at that. Tapped it. Snap. Those of you who were like, oh, it's going long, and you bought long. It literally came back, re-tapped into that reversal, and then snap. Now you're in a panic because if you're bought that and you jumped the gun on it and you did not follow the rules, now you're getting squeezed. Just wait. You'll see the importance of following your rules. Now you may say, well, what about this here, Darren? We traded above it. Does that mean that we're going to trace back into it and go higher? Well, when you've got an overlapping one that says, I've broken these old highs, I've got a reversal, I've traded back into it, and I've got this one here that says, you want to go higher? Well, the next one above it is right here. So if you don't have confirmation on the second one, you're just trading back inside this range, which is greater than 50%. See that? It ran back. So even if you were wrong, let's show you if you were wrong. Let's say you went, I like this one. Any opportunity, if it gets that back below 50% of this range, I want to buy this. It pops below 50, you go, I'm taking that as a long. As soon as it gets to 50%, move your stop loss to break even. Say, I'm gonna, if it comes back and taps me, that's okay. This is in a situation where it could reverse it. So hits 62%, move your stop loss to 50 now. You're up in a little bit of profit. And now take a portion, another 10% off. As soon as it hits 70%, take another portion off, move to 62, boop, comes back and takes you out. You're on the wrong side of it because it ripped back against you. But even if you followed the damn rules of the fib tool, you would have been safe. Even if you follow the rules, you got to follow the rules of Hadi. That's what we're going to call it. The rules of Hadi. That's discipline. Because if your eyes were so focusing up here and you get all greed, it's going for sure. It's got to get above there, you say. It's got to close above that. Anyway. So we're in a deep discount now. We've swept this low here. 10 o'clock. I'd love to see it take out 930's low. Take out this. And then start to march back up again. Discount array. Right here. Keep your eye on it, Abs. Right off that 1 hour chart again. Right off this old high here. Looking for the discount. right inside that first initial presentation, right to the top of that. That's that 1 hour premium array that we reached for inside here, that we found support off of. And we're coming back and tip. That's the top of it right there. Look for running below these lows. Look at that, closed right through it. Range extension, went straight through it, through the range extension. Take these lows here. Right back inside Wednesday's initial presentation. I'm going to mark this out here. See how that reversal here went right through the discount array. Closed, actually, to extend that range, we want to see it close below the discount array, right? Well, it just ripped straight through and took it. Initial presentation on Friday. That has now swept all of this liquidity here. And this discount array was closed below. You see that? We've swept all that out here now. Now I want to see if this little turtle suit, let's see if we create a fair value gap, get back through it, come back, so find support at it, look for your premium array to get through that and go higher. 50% of the hourly chart. This is the new day opening, a regular trading hours gap. We trade back into 50% of that. We've bounced off that now, taking out that low. So if we come back for a full fill, that would be all the way back to this new week's open. If we filled that regular trading hour gap, that's down at 21,511. Yeah, it's returned back into this level. You see how it ran right through it, using this for support to go lower. So we've got 51 minutes left, I guess, of this candle to finish up. So looking for any type of reversal pattern here to aim for higher prices. Back above here. See, now that's banging off the bottom of that hourly pattern. Ran through it, came back up. Now we're tapping on the bottom of it. Why does it seem like it wants to go lower, Chris? What's your narrative? Stay on your narrative. What time frame are you on? do like to see if we can get above this candle on the close and see if we can't use this candle for support. Instinct bias, note that, because if this goes lower, note the feeling you're going to have on it going lower, because then you're just going to say, I rely on instinct instead of actually reading the charts. And that's the kind of stuff you got to get away from, because that's that you're listening to your feelings and instinct. You haven't been doing it long enough to get an instinct, right? And I don't mean that as an insult. Your instincts haven't served you in the past. And if they are right and this does go lower, then you're going to reward that instinct instead of rewarding sound trading principles, if that makes any sense to you. So we haven't got a body above here yet. Does that make sense to you, Chris? I don't want to seem like I'm picking on you, but sound logic trading narrative is not based on instinct. It's not instinct. I know when I did EMS as an ambulance guy, I started out, you have to follow the rules, you have to follow the algorithms, you have to do the check for the signs and symptoms. If they meet a certain thing, you go down the algorithmic chart and you treat the chest pain. You know, just a guy says, oh, my chest hurts. And you go, okay, here's some nitroglycerin, and here's some drugs for your chest pain. You say, well, no, I got hit in the chest with a baseball. You go, ooh, well, that nitroglycerin's not going to feel too good, right? That's just kind of rushing ahead. Just because you heard one symptom, you can't, it's not till later on you look at this guy and you go, okay, he's old guy, he's overweight, he's got, his skin, his face is gray, he's got chest pain, he's wheezing, he's diaphoretic and sweaty. You just look at him within 10 seconds, you can go, this guy's having a jammer, right? He's having a full-on jammer. So that's where instinct starts to kick in, but not based on your previous trading history. And I don't want that to mean like I'm picking on you, because I'm not. I want to give it to you as straight as I can and not sugarcoat the shit out of this. I want to make sure you're clear and you understand that you've got to have a solid trade setup, a solid plan, wait for it to execute, because of that whole fear of missing out that you had. You see how that was for naught? This, you were like, oh, I've missed out. It's going to run for that objective he was aiming for. And then all of a sudden it reversed. And then it came all the way back and you go, oh, well, do you have fear of missing out now? Or have you now changed your mind to, oh, it's coming back down this way? What about all that fear of missing out that you had? We're way past where a possibility for you to get the long in. So has that made you feel better? Or are you worried about now going lower? You see how you're missing it here and then you want to chase it back going lower? Where's the sound logical trade pattern? That's what you want to have. If you don't have it, don't trade it. You haven't traded for 3 days, so that's good. You make it sound like it's a punishment. Don't trade for 3 months. I can't do that. I said to you, don't trade for 3 months, Chris, until you get a solid trade set up and that you get rid of that whole idea behind the instinct. Get rid of that whole idea behind whatever I feel is what I got to trade. Get rid of it. That is not a way to start trading. It is not. Everybody does that. They hear somebody else say, buy this sentiment, and you chase sentiment. The market's designed to rip people like you off. You don't want that, man. Get a solid setup, watch it unfold over and over, and build your narrative around every candle that's forming. Is it doing what I want it to do? If it's not, I'm not touching it, because I know this fear of missing out was completely a wasted bit of energy. All of you out there who are going, oh, I missed that. And then all of a sudden it went, oh, it came back against you. And you beat yourself up and you go, oh, damn you. You're such an idiot. How could you? It was so obvious. Why didn't you see that? Now you totally screwed yourself, and you get yourself all that negative energy. Then all of a sudden it goes whip right back against you. You go, ooh, maybe I wasn't so sad after all. Zero to do with emotions. And if you've got that, screen capture this, please, right in here. I had a fear of missing out, but it was so, it confirmed for me that fear of missing out is just an emotional term that doesn't serve me. And how exciting was it to see that the market constantly gives me opportunities to renegotiate my position. Stop loss here, fail safe, comes back inside it and goes lower. Now, all that fear of missing out, they're giving you an opportunity. They're saying, okay, people who are afraid of missing out, here's your opportunity. We'll come back and get you. And I'm going to run right through you, take out your stop loss. Now, if you're afraid of missing out, it just took you. Now you double down on your beat yourself up. Oh, why didn't I see that reversal? Damn it. You see, it just becomes this big emotional negative game, right? Anyway, you get my point. Abs, did you see that come back? Isn't that crazy? I wrote this: if I reward that correct instinct I had for that trade I wanted to take for the short at 1010, and let's say it plays out, then that's a bad long-term habit for success. Never reward instincts. Okay, good. Now I want you to reframe that, Chris. Rewrite that phrase, and I want you to post it again. Rewrite that phrase in a way that empowers you, not disempowers you. Behavior is very important about what you say to yourself. Your self-talk is critical. So say the same, give yourself the same good advice, but in a positive way. Because what you're doing now is reinforcing negative thinking about something you do that you shouldn't do, instead of something you saw that you now can get excited about. I recognize this. I recognize I had this feeling. And the first part of understanding you have a problem of reacting on emotions is identifying it. No different than an alcoholic or whatever. You have to identify where the problem is, so you can say, when does that feeling start? Now you can start to zero in on when it starts. Then when it starts, you start to get that feeling. You can make the decision to either go in the wrong direction or go in the positive direction. So if you train your brain to constantly focus on the positive, you'll find yourself at that decision point in your life leaning where? Towards the positive or towards the negative? How have you built your thinking? Your thinking must be built around positive outcomes, not negative outcomes. This is why ICT tells you to journal entry in positive mindset only, never negative. You can identify negative patterns, but reinforce it in a positive way. The fact that you identified it, the fact that you won't make that decision in the future, and you journal it and journal it and journal it. And that's why you go back to your journal and you say to yourself, I'm repeating this pattern. Okay, good. That's a good thing to see. I keep repeating the pattern. I see it. Now I've zeroed in on it, much like on a chart. You find, here's the problem. I'm overcommitting here. I need to focus on this. I keep writing this down in my journal entry over and over again. That's why you go back and read it. That's why yesterday when you were saying about, I'm never going to read this again, you should read it again. because it identifies patterns of behavior that you can identify and overcome. Again, get to that point of decision making. I'm making this, I got this feeling, what am I going to do? Am I going to succumb to it, or am I going to stay positive and move to the direction I want to go? And it's a decision point. Anything that you have in your life, if you're in a shitty place in your life and you start to get that feeling, if you don't identify it, like the other day, I identified it in my in the channel. You'll see I was talking to Abs about it. I was seeing some I got a reaction. I had an ego reaction to something, and I identified that it was ego that was feeding me. That was my ego was being this little ego guy sitting. I picture him sitting on my shoulder saying, you know, that's what you show. That's what you teach. And, you know, that's not fair. Someone's stealing your idea. And then I was like, whoa, 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 you're doing this stuff for free. I made that decision now. So I can either go down the negative pathway and go, because I recognize the feeling. I can go down that negative pathway and say, it's a disservice to me. It's blah, blah, blah. And you could find all these negative thoughts. Or you could go, you know what? If somebody else is showing the same thing that you're showing, they're rephrasing it in a different way, and people are learning from it. Isn't that the whole point of your channel? To help people grow? It's not about your ego. Put your ego in check. Get excited about the fact that these people are learning something, even if they need to hear the same thing in a different way. They're learning, they're growing. That's what you want to do. And I go, oh, that's a nicer place to sit. Or I can sit there like some of the mentors we've seen in the past, and they get infuriated by people stealing their stuff or people not giving them the credit. And it's more about significance than contribution. So I moved back into contribution, better place to sit inside my body. Decision point. I can go focus on positive, focus on negative, lean towards the positive all the time. I learned that from my wife. So stay there, man. Feed the positive. There's that discount array, that imbalance. We hit it. Now I want to see a reaction out of here. I want to see us get on top of this here now. And we have a CAM model 3 entry, CAM model 2, CAM model 1 once we get above this. So write that thing out in a positive way, Chris. Never trade through instincts. It is a punishment. Months. See what you're focusing on there, Chris? When I said, don't do it for months, you went, it's a punishment? Ah, interesting. That's like saying to an addict, you're not going to give me anything. I'm going to hurt. So you recognize that there's a need there, and you look at it as it's a punishment. And you say, instead of looking at it as, hey, look, that's an opportunity. You mean I don't have to trade for whole months? Somebody's given me permission not to hit the button and just to study for months without the fear of losing and develop a plan that helps me execute trades logically. That's great. I've got permission to do that now. Whew. I don't have to buy any more accounts. I don't have to do any of that stuff. I get some free time to myself to study and make a plan and execute it and make it work, work, work. That's positive thinking, not that's a punishment. You mean I can't trade for months? See the difference? Now, which way do you lean when you say to yourself, it's punishment? Why is it punishment? Why does it feel like punishment? I'm being denied. Are you? Are you given an opportunity? How do you look at it? Anyway, there will always be more trades in the market. Can you look at MSTR? I certainly can. MSTR. Oh, come on down. Get below here. Let's see this change direction. Let's see a market maker sell model starting to kick in here. This would be nice. Anyway, not that I don't buy it, so whatever. Let's use this one. MSTR, you said, right? MSTR. This one here, I would imagine that's the one you want. What's this one? MicroStrategy Incorporated? Is that the one? I'm going to get back down to that one. In trading, instinct only comes with lots of experience, like any other competitive field. Many months of successful and unsuccessful trades built up experience in the subconscious mind. Good to find your channel. Thanks, Cap. I'm going to call you Cap. Captain. Oh, Captain, my Captain. Welcome. That is when you trade with unconscious confidence. There's a phrase we use in NLP. There's a part, and this is going to kind of maybe a bit long-winded. I'll get to this MSTR in a second, because I have to say this. There's levels of competence. There's unconscious, unknown. So there's what you don't know that you don't know. Then there's conscious incompetence. So there's knowing that you don't know. Then there's conscious competence. So then there's knowing what you know. And then there's conscious competence. So there's now you become competent at something, but you're consciously aware of what you have to do to it. And then there's unconscious competence, which means you do something instinctively. So there's levels, and you're at the level, Chris, where you go, I am consciously incompetent. And I don't mean that in a bad way, but I understand there's limitations. So you can change the incompetent to limitations. You understand there's a lot of things out there that we don't know that we don't know because we've never been aware of it. Then you know that you don't know it. Then you know it. Then you don't know how you know it. You just know it because you've been doing it for so long. It just becomes instinctive, right? So there's all those four different levels. I'm not there yet. This is when you can trade with unconscious competence. Whether it's turning out now, it will happen when it happens. It works towards my goals. Sure, it's going to happen. It happens all the time. I'm still here, even though I'm not. Holiday, I'm still here, even though I'm not that chatty. Low. Cap is fine. Good day for silver. Took some gains. This trade I wanted to do instinctively was a great thought, but I felt good about it afterwards. It created an emotion of urgency to confirm with myself that I was right. I feel better about it because it helps me build patience. Okay. So you're still on emotional reward. So just be aware that what you're doing right now, you've rephrased it in a way that supports emotion again, right? So you want to think about, my instinct said this. What is it about my instinct that was correct? I saw a specific level that I thought would provide support. There's my first in, or my brain is starting to recognize patterns of change. That's how I would kind of phrase that. Not just saying, I want to reward. Yes, I saw that. I felt good about something. My instincts told me this. So basically what you're saying is, I kind of beat you up on the idea of instinct, but then you turn around and you reinforce instinct by saying, you know, I should feel good about that because I was right, but I didn't take the trade. Okay, you got some good positives in there. But watch how you reward emotion instead of structure and discipline and an organized narrative. Does that make sense? You see the difference between that? One rewards an emotional response. Therefore, what's the opposite of that? You have to reward a negative response, or you have to punish a negative emotional response. So don't reward your emotions, reward your plan, your narrative, why it worked, why it didn't work, and say, yes, I saw this screen capture. Here's the point where I saw it change. It switched up here, and I knew it was going to go in this direction because this candle acted in this way, and I feel great about myself because the plan worked out. It executed exactly as I had hoped. Way to go. Now you can reward yourself with a positive emotion because the emotion is a response to good, sound judgment, right? If that makes sense. I sorted 1950. I don't know how I knew to short there, but I knew. You don't know how you knew to short there, but you knew? You're like a master trainer, or did you just hit it and now you're rewarding yourself emotionally? I don't know. I don't know your trade soup master, and I don't know your history. I know a little bit about Chris, and I'm kind of taking him under my wing because I want to see him turn it around here. And so I don't know much about your trade, but if you're going by instinct, with no sound judgment, I'd say you're doing the same thing Chris is doing. Now you're just going to reward a guess, a good guess. Unless you got like years and years of trading and your narrative worked out. That's just my belief anyway. I don't want my belief to conflict with yours, but it's got to be sound, logical trading. Otherwise, you're guessing, right? Anyway, let's get into MSTR. This is who asked for MSTR. Kevin. This is the one you wanted, Kevin. On the daily chart, you're in the middle of the range. You're stuck in the middle of this range here. Here's your premium, your discount. You've come back to your discount already. You see how you ran this premium box right out? You didn't come back into it, and it ran straight down into your discount. Little box right here. You ran all the way through it. We haven't closed below it yet. And now you're coming back into this range. So it's compressing on a daily chart, hourly chart. Probably on the daily chart, I'd say that would be my upside objective if I was looking for this. Not that I got a high hopes for this right now, because right there, I'd be looking for somewhere around here. Pull your fib tool from high here to low. See where 50% puts you in the consequent encroachment of this SIBI here. So that would be our first upside objective. Once I broke this, found support, look for that, then this. So you got to get back above here. Because if that rolls over and takes out the mean threshold of this candle, you're looking for lower prices, and then I'd be looking for the discount array in a larger range here, and it would be anywhere from all the way here down to there. See how you're sitting in it right now? The larger range, and also inside the smaller range. They're both overlapping inside this guy. So I'd like to see this slowly keep climbing up. The little trend line people will be all eating this thing up. They'd be like, oh, look at this. It's a nice trough from there all the way up to there, and there all the way up to there. They'd be drawing nice little trend line patterns here going higher. So this is a time where I'd say, yeah, maybe come back at least to 50% of that range. But if that rolls through here, then look for this to get taken out. And if we start coming back into here, look for mean threshold, and there's a little imbalance right down here. Let's look at the hourly chart, see if there's anything in there for you. Consequent encroachment of that one. The new day opening gap. See how you went from reversal all the way back inside it and just trip below it, but the mean threshold holds. Remember, I told you when you get a candle that makes the reversal, you've got to use its mean threshold as your wiggle room Stop loss would sit down here. If it breaks that on a close, then close out your stop loss before it gets taken. And wait for it to close back above here. So watch, see how it just goes, boop, comes back near the mean threshold, but doesn't hit it. And then we wait for it to trade back through this. So it goes boop, right through it, right here. And then watch, right there, bang, right on it. Trades through it, comes back, found support at it. Now you're going higher. So I would like to see inside here, close above this level now, use this candle for support, and then start running back deeper into this range, 50%, 62%, so on and so forth. That's how I would look at that, Kevin, if that helps. Oh, look at this. Look at this. So you're between here and here now. You've got this one, and you got this one. This one wants to go shorter, extends the range. This one, you want it to go higher. Now you're between this one and that one. They're overlapping. So what do you want to see? Break in market structure. And we're at 1030 now. So here's your 1030 turn. This could be the Crazy Ivan, where the Crazy Ivan comes back into this level and then continues going lower. So in that range. Hourly Hadi says we're at 62%. I like this. Now I want to see this get taken to the upside and patiently wait now. So we've got the first confirmation from discount array to premium array inside a small range, right? So let's just look at this one here. Let me get this all out of the way here. I've got so much crap in here. Remove. Let's get rid of this one, remove it. All right, so let's say we are inside this range. Reversal, traded below it right here. You trade back up inside it. So now you're short, aiming for your first objective here, and then wait for the next reversal. Then all of a sudden you see this. Oh, if we start to move back through that level on a close, I'm out. Okay, so it closes through it, comes back, you're out. Now you can go long. Right at 50%, just under 50% there, it goes to 62. Move your stop loss right instantly to break even. Pay yourself here. Then all of a sudden it goes, boom, hits 70%, move to 62. It has not come back down. It hits 78%, 75%, and you just jam it right up. So now you're sitting at 70. It runs up to 78. You hit 75, boop, and it comes back and taps you out. You're done. So there's that. You caught a little run down, and then you caught an instant run up. And now we're looking for this level to get taken. It does. Now you want to see if this will continue to take out this high. We're at the mean threshold right here at 88, right on the 40 candle. So return back into this order block, and I want to see it hold price right here. And then start to go higher. You want to see us break in market structure to confirm the rest of this trade, to see it go higher. See how we've closed just above here now? And we closed right on it. So that has to hold price now. Otherwise, we're coming back deeper into this range here. This 1 minute inversion's holding. This one was broken to the upside. This just retracement back into here. I like this so far. It's following the rule of, so Chris, when you're looking at this now, here's how you kind of look at your narrative and say, this is the range I'm in. This is the fair value gap inversion now, because we've traded above it and through it. This is an inversion. So you have this one supports going lower, this one supports going higher. This mean threshold is the line in the sand you want to see to hold price to go lower. And you don't want to see that get taken to the upside. It does and hits the mean threshold. So if it bounces off of this now and starts to run back through here, which it does, comes back and taps it. Now you want to see this run back into this range. And now your line in the sand is right here. And your wiggle room is right down to mean threshold. Stop loss is sitting right here. So if you close below here, now you go, I'm on the wrong side of this. It's going to go lower, move to the sidelines and wait. Wait for a reclaim of this on the downs. Once we've broken through, come back, reclaim this order block and this fair value gap to go lower. Or if it runs back through it, then you say it's got to take out this high. I'm not going to get caught up inside a consolidation here and getting beat up. So this little pop into here is a reversal, trade back to a fair value gap on this side. If as Michael would do this one, which happens to overlap with R1 here. So he might stick his stop loss just below here. I don't know what Michael would do, but he'd want to see this stay open and that just tap that there and start leaving. But again, we don't have a market structure break yet. That's the one thing missing out of the rules that Derek gave you in his presentation. You want to see a break in structure or this breaker right here. You want to see price get above that and use this breaker or the first fair value gap as support to go higher. So that's my line in the sand right here. Let's see if it closes below that. Peter, I had a couple of aha moments today with building my ICT skills. I'm giving myself one more trade today, so I keep my mental state positive. Thank you so much for explaining the same stuff day in and out. You're welcome. I'm getting it, but need every review possible. That's okay, Peter. We're here every day. I'm just doing, this is all I know, really. I just know my reversals and I know my inversions. And if you build your narrative regularly, so you see how we've got one wants to go lower, one that wants to go higher, and they're kind of battling between each other. You look at these two, Sibby and Bissies, they're opposing candles. They're like opposite sides. You got the good guys and the bad guys, or the good guys and the bad guys, whatever way you want to look at it. And they're wrestling right now, back and forth. Who's going to get beat up on? And I tend to go, of the two that have been attacked right now, which one has been attacked the most? Boom, hit it, boom, drive into it, drive through it. Keep trying to drive through it. Comes back, this guy here. You traded above it, tap, tap, tap. There's nothing, we haven't driven through it like we did with this guy here. So to me, this one's really getting worked harder and this one's not. And I want to see that stay open. Institutional order flow entry drill would have been something like here, but this is just a retap of that fair value gap and go higher. It feels totally like it wants to go higher to me, but I'm more over 50% stronger bullish than I am bearish right now, just because this has been worked hard already. And this is just coming back to inside this range. Always look at the ranges that you're in. Right off 50%. See that? Tap it. And now we're pushing through this one. See that? That's all it needs to do. 50%. Ding, 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 ding. Chris, this is another, here's a simple, I want you to try this. Okay. I don't know if you have a narrative or a trade plan that you're really comfortable with, but just do this every hour. Okay. Every hour. I just want you to write this down. Every 10:50, 11:50, 12, or 1:50, 2:50, for the rest of the day, I want you to look for at the macro time, look for any opportunity to see a run below an old low and a Sibby to form, or a Bissy if it's going from high to low. If we've got an overall objective wanting to go higher, I want you to every hour look for this setup, nothing else. Just focus on that setup. Wait till 10:50, 11:50 every hour and wait for this. If you don't see it, I just want you to mark this out like this. So 10:50, you look for the nearest Sibby that has taken out a low. Are we in close proximity to reaching into this Sibby? And that strategy, I want you to do every hour. Every hour you come back and you go, just draw this out and just say, my narrative is, if it breaks below this low, my stop loss would be sitting here. So you draw a little S and an L on your chart. Take your little text box here and go down here and put SL. My stop loss would be here. Okay. And my entry is 1, 2, or 3. Anywhere in those 3 is where my entry is. And it's at a macro time. So I'm expecting support to go higher. If it breaks this, and takes the mean threshold out, my stop loss is here. My FL, fail safe, or FS is right here. If we break through that, I'm out. And then you just leave it, screen capture it, and say, this is the narrative I built. Now I move to the sidelines and I wait for the next hour. Don't look for anything else, any other time. Wait patiently for 11:50, a whole hour, and see how distracted you get between 10:50 and 11:50, and see how many times you're like, oh, what else am I looking for? What else am I looking for? Don't leave the room and go somewhere else. Keep studying the charts. And then when your alarm goes off, like mine does, at 11:50, 10:50, and it says, start looking for your setup, I look for that setup. And you hear ding, ding, ding. Now it's time to start looking. Right? We're trading through that level already. Mean threshold. That's already not good because you want to see it just tap that and go. You don't want to see it reaching into here. It's 11 o'clock, so it could take out this 10:30 low. And then see a reversal. Now I've completely, that would be out of that trade. Because it's hit my fail safe now. So I'd be out. So then you you screen capture that and you say, here's where it failed. That was my narrative. That's the one I talked about, where it failed. Good. So I recognize the positive is I recognize where my fail point was, and the stop run is going to be taken. I look at 11 o'clock now, and I look at time and price, and I'm looking for this low to extend because now I've traded below the low and below the mean threshold. I'm expecting to see this low get taken, and then I want to see a reversal to go back higher. Looking at this whole range I'm in right now, you've got 21,485 and this wick. $21,459. So now this here, now you could say, okay, now I want to see this range extension. So if we come back into this inversion here and use that to leverage to go lower, that's the support level I want to see to come lower now. Stay on the horse. And it doesn't matter if you take a loss, that's the narrative you look for. And if it supports it and goes higher, you go, great. Here's where it fails. So you have the positive and the negative narrative built in. Okay. So we did not get a structure break. One important element that was missing out of that whole range run, we came back in, say these two were fighting. This one, I was more positive about it going higher. And it fails for me if I start to lose that level. Well, there you go. It failed. So I was so sure it would go higher. Don't marry the idea. You've got to have your narrative of where does it fail for me? Okay. So, and it failed. Watch for range extension now. There's the range extension. They're looking for 21,487. It's 21,482. That's mean threshold. We're digging into that. See what kind of reaction you get here. Um, Stop loss is hit. Yeah, yeah, oh, yeah. But don't forget fail safe. You got, that's why you gotta have a fail safe. You know when it's your stop loss is gonna get taken. You would never hold on to a stop loss there once you fail safe. If you guys believe in the fail safe idea. If you don't, that's okay. If your stop gets taken, you can expect it to get taken once that fair value gap gets taken to the downside. So if you enter in short or long here and it comes back down and you go, oh, it closed below that. If we can get back to my break even point, I can get out of that trade at break even. So as soon as it closes here, if it comes back and taps that again, you got to develop rules around what if it doesn't reach that? Where do I move my stop loss now? So where that ended, I would move the stop loss to here. And as it closes back up, if you see it go boop, it runs back up and comes back and taps that, that's where I get out. So as soon as it starts to march higher, does it come to my break even? So my stop loss was really from here to wherever that candle's open was. And if it instantly went down, then up to here, then down again, then I would be out. I would have my stop loss sitting here and I'd wait. And as soon as it started to come back down into that candle, that's the loss there versus from there to there. But again, that's because I have different rules around a fail safe. So that mean threshold of that wick. We're past the mean threshold already. So we can expect lower prices. So rejection block. $15-minute chart. The next downside objective is right here. And we've hit the top of it already. Rejection. So I want to see this little reversal here. See if it takes price on the upside. Nope. Already came back through all three of its arrays here. So wait for a solid candle to get through here. Look for it. We're deeper into the 15-minute discount array inside the larger range right here. So for me, Chris, for journal entry, Here, I'm going to put in when I was confident about this going higher, I had missed the fact, and I did mention it, but at one of the rules, the rule that was missing was the break in market structure to the upside. We were battling between these two, and I was like, okay, that one's been hit multiple times. That's not a rule. It's just an observation. And I failed to acknowledge for myself that that rule needs to be intact along with all this other stuff, especially when you have one that wants to go lower, one that wants to go higher. And I'm marrying the idea that I wanted it to get back up here. So again, that's what I will document in here, saying my bias, even though the charts were showing me that my bias was incorrect for the present time, marrying the idea of wanting to see a reversal to get back up in here, whilst showing you multiple opportunities for continuation on the downside, came back into the order block, continued to go lower, came back up, created another reversal, came back in, found support at it. The bodies didn't, just tiny little break there, but you got to put the wiggle room in here. I neglected to look at the wiggle room here, and the mean threshold, and I didn't get the market structure break for continuation on the upside. So break the downside objective right here on a close. You come back up, did not take that one out, but you traded through the mean threshold of this candle. Use this candle now for support to go lower. As soon as you break through it, you come back up inside the low, trade below it, come back up inside the low, and continue on the downside. So that's my screen capture. Talk to myself, because I want to be right in front of you guys. But I have to admit where I'm wrong, and why it failed was because I didn't take the full rule, the rule of break market structure to the upside with a close on the body, use the breaker for support to go higher. You didn't see that, so your analysis is incorrect because of the rule. Good for you. You recognize the rule. You recognize where you started to go wrong here. Write that down. Reward it in a positive way. See, you're back to, I felt right to do my 10-10 turn. You're going on a gut instinct. You had no narrative there, Chris. You just went, my gut's telling me. And now you're looking to continuously, you're looking for that fix, that emotional fix, that validation. You do not want emotional validation, my friend. You don't. I know that's what you crave, but you can't get emotional validation. You have to go with a sound logic trade setup. And if you didn't have that, then it doesn't matter that it reached an objective. That you're just looking for something to validate a feeling. That's what that addiction type feeling is. You get hooked on, I got a feeling I'm going to trade it. It has not worked for you in the past. So rewarding it now just because it did is what addicts get when you get your hit, when you get your fix, when you get your dopamine hit, right? You got to have a sound trade plan. Reward that. Reward a narrative, not an instinct. How do you journal it? You just take your chart here, you go screen capture, you hit that little box at the bottom with the little scissors on it, and then you go like this, and you grab it like that, and then you can write in here, you can do whatever you want in that, hit your text box, put it in another, well, I'm not going to click that now, but you can bring that up in Paint, put text all over it, put lines all over it where you want it to, why it failed at this point, why I didn't get this break in market structure to the upside here, and document it out. I don't do it that way. I use this. I go here and I go, and I go like this. I draw a line out here like that. And then I take text and then put text in here, and then I go market. What I would put, market structure break was not above this level. So then you put your little thing up here like this, and then you say market structure was not essential element of was the essential element missing in this price action going higher. Wait to see this and all the elements that support your trade setup. Well done today, recognizing the failure point of the trade going higher. Keep up the great work. You look, this is great. Woohoo! You're a good man, man. You're so good looking. Right? So you frame that, so you smile at yourself when you put it, because you end it with something positive in your head, even if you're making yourself smile and laugh. It's a better energy to end that on than, oh, you did shit, you missed this, blah, blah, blah. You give yourself all that negative crap, and then you close it, screen capture that, and stick it in a file. What have you left? What kind of energy have you left inside your person? It's shit energy, man. So pump yourself up, make it feel, you're the only one reading this anyway, right? Does that make sense? I hope it makes sense. And then I screen capture that and stick it in your trade file, and then file it away. And then go back and review it. At the end of the week, go back over your notes, review them. The end of the day, go back over your notes, review them. Next week, when you start your next week, do a quick synopsis on what you were making wrong and a commitment to yourself. Write it down. My commitment to myself this week is to. And here's the phrase. Do I say, my commitment this week, let's say you get a whole bunch of rules or a bunch of things that you've determined that you didn't do wrong, you need to work on. Here's some new awesome things for me to work on this week. Okay? And then when you start the week off, do you start off with the phrase, which one of these phrases is more empowering? I am not going to do these things this week. Or when I recognize the feelings of these behaviors, I will do this. I am stronger and stronger each and every week. I am going to do this. At the end of the day, saying, I recognize where that feeling started, and here's the decision point, right? There's that point where I can go negative or positive. I made the decision. Reward that. Screen capture it, document it. Yes, I caught myself today with that feeling that made me feel like I was going to go lower. And it's all just your own journal entry. It doesn't have to just share it with anybody, but it's really, really working a portion of trade that is way more important in the long run than your chart setups. Chart setups, you'll get them. This was interesting because we talked about the battle here. And this was all my, look at all this hitting stuff. Michael never taught you that. That was just me and my thinking. I go, okay, so you just got burned on that. If you stuck to the basic rules of these two are battling, who's winning, well, know when the high or the low of these levels gets taken. Well, they got taken there. So now you know you're on the wrong side of it. It's going to go lower. That's what I should have described instead of this, look, it's drilling against here. That's not logic. That's just me playing battle chess with myself and thinking that was some sort of instinctual thing I should pass on to people. Okay, stick to the rules. Stick to the rules. Anyway. That's how would I reframe what your trade, this thing here, the narrative, and that's how I would journal that whole thing tonight, is identifying where I went wrong in this setup, what I was thinking. And now I know that that was not rule following. That was just telling you guys a bunch of things that I was thinking. It was, look, it's drilling on here, drilling on here. Notice that one's drilling more on this than that one, than this one. This one's holding, I'm more stronger in this direction. That has nothing said in rules. That was all instinctive crap that did not work, right? So I just go, ditch that, stick with the rules, stop freelancing and stick with the rules. Got it? You're awesome at this stuff. You got 1,000 people that are subscribed to your channel because you read the tape the proper way, not this, hey, look, it's two little battling soldiers and stuff. Okay. Stop finessing the market and just stick with the rules. That's the rule. Stay in price action, and you don't need to talk about this other stuff. Just stick with the rules. You do well when you stick to the rules. That's what you want to teach. That's what you want to share with people. Lead by example. That's how I will. You're doing great. Continue to lead by example. It serves you better in the long run. That ends it, instead of going, stop being a dick and freelancing. Right? Always, always, always end your day on a positive. So now we're looking for these wicks to get taken. We have on an hourly level, what's our discount array? I'm not going to put it on here. Chris, tell me where the discount array is. And post it on our Telegram channel. I want you to take a box and I want you to draw it out here like that on the discount array in the hourly chart. Put it on there and stick it. That's your homework right now. Show me all the discount arrays, not just one. There's a discount box and there's discount arrays. Give me each one of the discount arrays all the way down to this candle's low. Mark them all out. That's your homework. And I'm willing to do this with you, one-on-one with you. If you don't want to do it, that's okay. I won't waste my time and I won't waste your time. But if you want to start getting dialed in and stop emotional trading and gut instinct trading that hasn't served you in the past. You want to get back to rules and rule-based stuff, mark them out. Give me, that's your homework. Print it or do a screen capture of it and post it on my Telegram channel there. And I'll review it for you. And I'll help you out with it. Abs, did you see that freaking kickoff? Jeepers, man. You got something, man. You got something. Darren, look at the 4-hour chart. Oh, my goodness. Look at that. So if that's your 4-hour objective right here, look at how that came all the way back into this big bearish candle here. Look at its open. Look at how it got hit inside that fair value gap discount array. It's probably just under discount too. Let me get rid of this one. Remove that. Let's do this. Look at that, just under the 50%. Or is it right on 50%? Right on 50% and a refill of this. So now you go down into the discount array, or sorry, you go down to the lower time frames and you're looking for this level. If you're trading on a 4-hour chart, you look at this level and you say, what a perfect retrace to this. Now I'm looking for any opportunity to see a reversal in here, and I'm going to catch a reversal, right? Then you go down to the 1-hour chart. Do I have a reversal setting up here yet? No, I don't. What about a 15-minute chart? Do I have a reversal here? We've already got through this level. I don't have a reversal till I get back through here, find support, and get back in through this order block here. So that's a 15-minute. 5-minute chart. Do I have a reversal on a 5-minute chart? I'm looking for this right here. No. What about a 1-minute chart? Do I have a reversal? There's a small... Nope. I want to see this break above here, find some support as a cam model entry for a run back in here. A real good break would be getting above this breaker right here that takes out these lows. If we get above that breaker and there's a small little premium array, if we can get above that, then I'm looking for higher prices. I pull the fib tool out of here and I go from here to here like this. And I go, where's 50%? So if we get above 50%, come back, find a cam model 1 entry for a run to a premium array, which would put us, our first one would be this breaker here that takes out this little high, would be right back in here, which is just at the 50% mark. See how it hits it perfectly here? 62 will put you right into the mean threshold of that breaker. I know Michael adds both of them. This one to me is the most sensitive one. So I like that 62%. And if we're getting back into this order block, so if we can get back through the mean threshold of that order block and the mean threshold of this one on a close, I'm looking for the premium array up here, the premium box to box trading. So this would be the box right here. Get a body above it. See how it comes back to it right on the money right there. And now we're looking for further upside prices. Now I'd like to see that continue to push all the way through that 50% mark. If it stops on there, that's fine. Cam model 1, stay up there on a close, cam model 1, and then see if we can get a run back up into this level. And if we can break through the breaker, then we use that to leverage to go higher. And then you look for your 4-hour chart and you go, man, look at that. We found that perfect entry now on the lower time frame after seeing this higher time frame hit a key level on a reversal pattern that makes us want to go higher. Does that make sense? Do you guys see the logic of that? Now, that may be a completely bullshit narrative, but that's my thoughts, and I'm sticking to it. So now you see that that's the narrative built. So Chris, you can see how I had brought us to the 4-hour chart and said, check that out. You see it and you go, ooh, that's a perfect place. I look for a lower time frame now to support a run higher. Now, where is my rules for running higher? So I can use multiple different entry points. One is a CAM model entry in this particular case. So you'll have a CAM model 1, CAM model 2, and a CAM model 3 entry. So you got all 3 entries that are potential here. We have now a break in market structure, right? We've broken this high with an up close candle. So if we get a retracement back into here and that little fair value gap to go higher, great. If we march all the way through this and just start ripping back now through all of this and aim for here, that's our first objective for box right here. See how it literally went above it? I want you guys to see this. It's important you see this. Right there. This candle's low is 483.75. What's this one? 483.50. So it's 0.25 into our little box, our reversal. And now we're going higher. As soon as it hits 50%. So if you're entered in there, which I did, as soon as it gets to 50%, I'm taking my stop loss now and I'm moving it to break even. And as soon as it hits 62%, I'll move to 50. Well, it's at 50. Yeah, so that's pretty much, yeah. So as soon as it hits 62, now you're using your fib tool to run all the way back into, bang, right there. So now I move that up to pay myself there. Now watch, we're just going to use this. So we're trading this like, think about this as live. We've entered in off that reversal right there. And now we're looking for 50%, 62%. Pay yourself. If it comes back to 50, you're out of the trade. You've caught a small little tiny run back in there. Celebrate it. High five yourself, whatever. Now if it hits 70%, you take another portion off there and move it to 62%. So we're just pretending here. And Chris, this is the kind of narrative. And don't worry about missing it, man. Who gives a shit? This is the kind of stuff you need to now start to build for yourself, your narrative that supports a specific trade setup. And then you just want to see if it unfolds. And if it unfolds, like right here, and unfolds, so there you hit 70%. So 62%, pay yourself at 70. If it hits 75, move to 70. So it hasn't come back against you, and you've just collected all of this in here right now. And there's our premium array hit. Now the next premium array above us, next box above us is right here. Right there. So we're looking for this box here now. Mitigation block, last down close candle that does not take out an old high is mitigation. So if we mitigate off of here, roll around. Now if it comes back and tags you out, you're out. So hit 79%, 75 is where you move to, you're out of the trade. So if this reverses on you now, comes back and takes you out, so be it. Then you wait for the next setup, and you've already collected a big chunk out of that. You'd be out right there. Wow, you would have been out right there at 75 because it hits 78, come back to 75, you're out of your trade. You wait. Now, if it takes off, you go, who gives a shit? I'll wait for my next break in market structure to the upside. As soon as we get back to here, I can continue going higher. If this reverses on me and comes all the way back down, now I can go, ha, I milked that whole freaking thing back in here. I'm on the wrong side. It decides to come down here and take these lows out. I'm all right with that. You see how that little fib tool paid you all the way up to 79% perfect retrace? And now if this comes all the way back down here, you'll see the joy of my fib tool technique for managing your trade and being on the wrong side of it. So I want to see this whole price now. I want to see that go higher. From there, we have a body traded above here. I like that. And remember, we can get our draw all the way back down into this this 50% of that range, which would put us pretty much right on target for this. %50 puts us, ooh, CAM model 1 entry, right? So we'll see if this holds. We'll see if this little fair value gap here gives away. And then we start to get back deeper into the range, which we wanted to see some retracement back in and give us a nice CAM model entry. So that's just what I'm kind of looking at that right now. But I want to see this come back down into the range. If we end up getting through this candle, look for this one to provide some support. This would be a nice little price leg. Do you see that? If we get back into here, then I take the price leg and I go like this. I stick that right on top of it there. If that price leg comes back to here and we get the next price leg higher, what would I be aiming for? Old highs. I would line up, and it lines up with the perfect consequent encroachment of that hourly chart. So this kind of like reverse engineering where you want to see your next objective go to in terms of price action. Does that make sense to you guys? Again, that's future stuff. A bunch of things have to happen first in order for that to unfold. That may just go straight from there. And if it does, then look for this kind of thing. That puts us back into this breaker again. You want to see this candle provide support. You want to get a body above it, come back, find support at its high or its open, and continue going higher. Could still roll over here in this premium level and come lower, or it could reach for this next premium level and roll over. The next bus is coming. Don't chase this. Don't chase this. Wait for your setup. If it takes off, don't get emotional. Just wait. Remember when it was way up here and it took off, you got, oh, I have fear of missing out. Then it ripped all the way back against you. I bet you don't have that fear of missing that out anymore. Because we said, shit happens, man. You'll get more opportunities. Well, you gained an opportunity right there, right on perfection for a reversal. And look where you're sitting now. Now we've got a new CAM model entry we're looking for this internal range liquidity. We traded all the way up into that, bang, look, now you hit the premium array, box to box. Woohoo! Now wait for it to trade above it, extend the range, and then go higher. You do not want to see it get below here now. So if it hits here, reverses on you at 12 o'clock, takes out these highs, reverses on you and comes all the way back down into this CAM model for lunch, because now we're in the lunch hour, you'll be like, oh, I thought it was going to go all the way back up to here. There's a bunch of things that have to happen first before you reach for these higher PD arrays. Look at that, right in there. So if that be the case, where does our Mr. Fib bring us now? %62 puts us right back in here. So if we get a retracement of 62% back into that range, interesting how we tapped this old 1 hour breaker again. We came back and tapped perfectly on the top of the breaker right there and there. And now we have a nice reaction off of it. We hit the premium array. So box right there, box to box, or fib tool it all the way up like we did. This is your 30 candle, 32. Time in a bottle, my friends. You can't ask for more precision than that. Time in a bottle, right to 30 candle. Love it. Love it. Darren, I did one trade on paper trade. How should I feel and why? You did one trade. So identify the paper trade that you took. Um, for me, the whole idea of you wanting to trade still, there's still that I kind of look at it like this heroin addict that was says, well, I'm not going to do heroin today. I'll just do pot, right? Just something because I need a hit. I need something to validate this dopamine hit. That should be a very important thing you're analyzing about yourself, Chris, is that need for a fix. Because I know what that's like. I spent so much time wasting money chasing that feeling, that rush of being in and trying to be right, and I knew it, and all the negative crap of beating yourself up. I totally know where you're feeling. So I would still be analyzing, why did you even feel the need to put a paper trade on? You should just be like drawing out on your chart, screen capturing it, and that's it. Not even hitting a buy. I told you, get rid of these damn buttons. You do not want to be buying and selling. You want validation, man. You're looking for significance. That is the wrong thing to trade in. Your trade model, mark it out. Do it for the next 6 months. Never hitting these damn buttons. Take them off your chart. Go here, take that button off, and do not put them on your chart. Get rid of them. I don't want to see you trading at all. And drawing out your boxes and just keep submitting your trade plan. Just keep posting it on the channel. That's bravery, man. That's courage to sit there and withhold yourself from all this and stay focused on the plan, the rules. Your generation wants so much quick fix that it's so hard to break you out of it. Commit yourself to being the guy that will not buckle to all this social media, all this dopamine hit crap. Do not be that generation that succumbs to that. Be the guy who can be disciplined enough to set his own rules, create his own destiny, and create his own future. You be that guy, Chris. Don't hit paper trades. Keep doing this until you go, I don't care about paper trading. I get excited about seeing my trade set up. Then, when you feel that and you don't feel that urge to be in a trade, get excited about the reversal, getting excited about watching these levels get hit, looking for this reversal pattern, waiting for this candle to get taken to the downside and using it for support to come back into the range. Get excited about that shit. You be the guy that takes your control of your destiny, your future. Be pumped about Chris and what he's capable of, and not the addiction to some freaking dopamine hit that you've been conditioned to feel. And that's why you lost all that money, because you were conditioned to quick dopamine hit. And your generation gets the shit beat out of you that way. I feel bad for it, but you be the kid that makes the change. And you'll be the guy sitting in front of all these other people younger than you when they're just so hooked on it, they don't think anything else other than, I just need the hit. And you'll be saying, look, trust me, I was there. See how we have not broken this here yet? You got this here. Yeah, we've got the premium ray has been hit. We've got a reverse situation happening. I want to see this level get taken on the downside and use this candle to support a continual reversal. If you see this piece here trading above it, then we're looking for another run on the liquidity here. I don't want to see that. I want to see 12 o'clock. Bring us all the way back down into 12 o'clock here. Maybe even running out that low. I want that to stick. So that's my narrative. There's my up and there's my down. So now I wait. I'm not in a trade. I just wait. Because there's nothing in here that says to me, I want to make a trade now. Unless you look for a break in this structure and you want to hold that stop loss to be above here. You wouldn't want to see that get taken to the upside again. But we're not there yet. Ugh, I don't care about your money, Chris. I'm going to stop. I'm going to stop giving you advice. You still can't stop hitting that damn button. You're worried about money. Who cares about your 510? And I don't care about your 955. I don't. From reckless trades, I was down 5 trades today. Now if I do it today. No, I'm not interested in any of that shit. Sorry. I take Monopoly money trades with my son for fun and bets. Hi, where can I find your Telegram links? Mags, it's just in the above you here in the links in the bio above. You'll see there's different, it says 4 links or something, 5 links. Just click on that and you'll see the Telegram channel in there. You're welcome to pop in anytime. I'm going to stop giving you advice, Chris. I'm just going to let you sort it out for a bit until you work it out. You're still hitting trade, so I'm talking to a wall right now. Just know that I'm there for you when you're ready. Right now, you're not ready. Darren, look at the 4-hour chart one more time. 4-hour chart one more time. So now we've kicked off of here. I see what you're doing. Yeah, I see it. I see what you're talking about. Do you guys see it too? Oh, let me delete that. What's he pointing to? Give me the candle that Hadi's pointing to on the 4-hour chart. What's the premium? I just gave it to you mostly as a hint, but yeah, I see it, Hadi. I think we have another inversion fair value gap down there. Down there? Oh, I'm looking at right here. I'm thinking if you're inside this range, Hadi, right now, and you've hit a discount array here, and you're coming back up, I'm looking at this guy right here, and this guy right here, and you're pulling back into it right now. So I'd expect to see a tap of this candle here. So look for 21,578 to 21,586 on the way up. You see that right here and right here inside this range. Just think that's the range you're inside. Don't worry about this big one just yet. We have come back to that level on the big range, but for inside this small range, what have I got? I've tapped this one here, and the upside one is this guy here first, then this one inside a larger range. That's my premium array right there. So 21,610 all the way down to 21,588. It's potential upside. If it hits it, rolls over and starts shooting back down again, then yes, I do see this one down here. But so far this one's holding, right? We're getting a nice kickback. So inside the range, what's the premium portion? That's up here. If it does start to stab back down again and does not get back up there, look for your lower time frame continuation, like a small little run on 12 o'clock, and then dive back down through the lunch hour into the 1, 2 o'clock, if this is the guy you're looking for. Which I assume is the what? Does that make sense to you? Do you see that my point there is we have not extended out of this range yet to reach for this. We're still inside this range, and we've hit that box inside that range. So we've nailed it. We've pulled back deeply back into the premium portion. What else is there above us on a 4-hour chart except these premium boxes? Now you go down into your lower time frame, an hourly, and say what supports that. What did we say it was? What supports my idea of 585 to 632? 585 to 632. 585 585 to 632, 585, 585 right here. So right here, 585, that'll put us right back in to finish that fair value gap of that SIBI off here, or that imbalance that we had going down. Now we want to see that, or that sell side. Now the buy side would finish that off, and 682 would put us into that premium box again. You see how they're overlapping? That's how I would look at that right now anyway. And then you go down into lower time frames. You see, does that continue to support that idea? There's your reversal. You went all the way up, wicked all the way through it, did not, it literally sat right on your stop loss. You don't have to put it down in here. And then run through premium, look for support off this candle. It ripped all the way through discount. This one candle here would have destroyed the whole rule. And you see how choppy it is in there. But then it smartens up, stays inside that box. All the bodies still respected. The wicks killed the trader, but the bodies held off that breaker and then ran higher to the premium array. Where's that premium one? Right there. We went through it, back down into a breaker, found support, went higher, run it out, reversal, trade back into it right here, run lower, take out the lows, 50% of the range, takes out the lows, ran out, new range, all the way back down into that discount box and below, right into that imbalance. There's a little tiny imbalance. If you stretch this out, you'll see it. See it right there? Who says they don't come back for those, hey? Crazy. So pull your fib tool from high to low here now. We haven't even hit 50% yet. And that's 584. Remember we said 4 hour was at least 583, I think it was. Right there. 586. So that's how you kind of dig down, Hadi, and you keep looking for those. That's a 15-minute chart. So that's another 1.5 handles above that to hit that 4 hour premium box. Got your point now. Good. Thank you. I tried joining Telegram via the link in about section, but it says the link is expired. Expired. Let me go in there and look at that right now. Expired. My channel. Oops. Shucks a magoo. Hang on a second here. You had trade or you had Telegram there? They said that link is expired. I'm clicking on that now. Nope. It says it's open. Join the group. I just clicked on it and it says join the group right there. It works. Try it again. Yes, I got to this page, and then when I join, it says link expired. Ooh, let me repost that then. I don't want that for you guys. Let's go into here. Let me get on my Telegram channel here, and I will repost this link for you guys. How do I get the how do we get the link? I can't remember how to get the link now. Anybody help me out there? How do I get that damn link? I'm trying to find the Telegram. Is it over here? Leave group, archive, pin, add folder, mark, read. Nope. I'm having a brain fart here, Mags. If Tristan was here, he'd know what the hell I'm doing wrong. Link. Telegram. I'm gonna go here. Paste. Join group. It says join group, and it says always allow to open links in this type in associated apps. Open. Does anybody else have problems with this link? Expired? It doesn't say anything about always allow him to open the links. Yeah, for some reason I don't see it jumping in there. Not sure. I'll work on that. I'll work on that for you. There's the 584. That's the first of your 4-hour ones there. You see how we've retraced back into this one right here. See how we've hit it already? There you go, D. That's what we're looking for, buddy. Hallelujah. So that's the narrative, and it's unfolding. So you get my point. So that held. That's a nice little retracement. We've traded above that. I want to see that start to march to the devil's number 666. This breaker now, we've traded above that breaker on a close. I want to see this breaker hold price now. And a matcha higher breakthrough here on the 1 hour. See how we're coming back into the premium portion of this. You want to see that 1 hour give way at 648 now. I'm going to move my stop loss now. I'm just going to let that trade roll now. I may end up getting my objective for the day, which is way up here. I may start to get that finally now. So I got in off of this candle here, right there, for higher price. And now my stop loss is sitting like right here. So just paying for the trade and letting it go. Thank you, Darren. Done for the AMC. Saying nothing so solid right now. So I'm looking for this level up here now. Finish this next price leg higher, which will put me right in the middle of this bullish kind of premium array now. You got 1, 2, 3 premium arrays. Remember how this was the only one we hit? Then we ripped through this one. You came back, just caught that one on the edge, ran through, just caught this one on the edge, and continue going lower. So you see how they're just, this one was the perfect entry there. Then you wait for this one to get taken out, trades back all the way inside that guy, trades back through here, comes back into that one, trades lower. Look at this one, trades back into that one, goes lower. Look for this breaker here to get taken to the downside. It does, trades back into it right here, and we keep going lower. So now I'm looking to see, now that we've got these highs taken, I'm going to move my stop loss into some profit here. There's multiple different layers in here that I want to see hold price. I don't want to see it trade back too far. Just see it keep coming. And you got to get ready for that 12 o'clock turn as well. So, Chris, did you set your alarm for 12 or for 11:50? 11:50 is right here. Did you set your alarm for 11:50 and say, where's the nearest upside candle or support level? Right off this breaker or this order block and that reversal there. Do you get a chance after 11:50 to hit it? You got this order block, but not that fair value gap. So you just make a note of that. You just say, I'm looking for these levels for continuation. At 11:50, did we break below this to come back into the range? We did not. We kept going higher. Okay. Make a note about that at 11:50, the macros at the 11:50 hour. And just make a note of it and then see how well at 11:50, 10:50, 8:50, all that, so on and so forth. How much did they support my price action? And if you're not doing it, then I'm not giving you any more ideas. You sort your stuff out. And Abs, I don't know if Abs, are you still in here, Abs? If you don't understand the 11:50 and 12:50, you don't understand macros, keep studying ICT stuff. macros happen a macro starts every hour at the 50 hour, which happens to be time in a bottle 50, and will go till 10:10. It'll go from 9:50 to 10:10. It will go from 8:50 to 9:10. Every hour, you get a 20-minute macro. You look for that reversal pattern, look for a low, look for a fair value gap, look for a break in market structure, and a return into that after the 50, and then take the macro for the next 20 minutes and just document it, mark it out on your chart, and move to the sidelines. That's all you got to do, brother. And then post the charts. Post them on Telegram there, and I'll review them with you and help you get your trade set up, sorted out. If you don't want to, then carry on, do your thing. You're still here? Okay, so keep an eye on that level. I'm sure you do anyway. Thanks, DC. See you later, Craig. I'm out of here shortly anyway. My stop loss is sitting here now. I want to see this consolidation. I want to see it accelerate through the consolidation, which it did. Now I want to see this order block hold price, because now I've got this reversal potential here. So my stop loss is sitting here. If this becomes a reverse back into this range and I don't get my 666 for the next price leg, I never count on these to absolutely pan out perfectly. So that's where my stop loss, because that's my fail safe. That's my reversal market structure coming back into that range. So that's why my stop loss is sitting right there. And then I'm out for, that's 12 o'clock reversal. There's 1150. 1150 is here. Wait, now you get this reversal. Don't forget, we still got till 10:10 or 12:10. That's the 12 o'clock potential reversal right there. I'm out of that trade. I think that one's going to come lower. So I'm out of that trade already. It's 12 o'clock. It's a typical type of time for 12 o'clock high to form. On my time in a bottle, that's a 12 hour. 12 is my turn point. So I'm expecting that to turn, and I've got a fair value gap that supports that. So I'm thinking that we've got another run back down lower now. See how we've taken out the low on a close. So I'm short here. And my stop loss. I just want to see this go now. So I want to see all that stay open. I'm going to see it run. So my stop loss is literally at break even, because that's 50% of that range already. So I'm at break even. I'll take a portion off here, and I'll start cinching my stop loss down. If it comes back and takes me out, that's okay. It's paid for the trade anyway. And nope, still hasn't hit it yet. So if it hits 62, I'm going to be just above 50%, and it will probably come back to 50%, because there's a fair value gap sitting here yet, and we haven't hit this order block. So I'm sitting right here now. sitting right on top of this candle because I'm just kind of chasing this down because it's already at 50%. So I'm just kind of chasing each candle down. If it comes back and taps me, I'm good. That's not the proper way to trade it, but I'm out. It was 40 bucks or something. So watch retracement back into here. Now tap that on a 3. What's that one, a 2? Now I want to see that come lower now. A little tippy tap. Coincidence. See you tomorrow. Yeah. Yeah, I'm going to take a little bathroom break. I'll be right back. Kind of keep your eyes on this 62%, this old level right here. And then see if we accelerate through here and run for these lows and start digging deeper into this range here. Okay. See it hit that level. See it hold here. See it keep coming lower. Mean threshold. Come back to 50% of the range and extend lower or pop through here. Now you're battling between one going shorter, one going higher. Same kind of situation we had here. See how the bias is lower? The bias is longer. Not that that's a rule. I don't want to get back into teaching shit that's not, it's more instinctive stuff than it is an actual rule. Stick with the rules. So mean threshold, I like to see that hold price now and start to push back through the mean threshold of this candle. So inside this small little range, I'm looking at that candle and that candle. So you watch the mean threshold here. Yeah, it's a good idea to just study it. But I do like the idea of it hitting that level, abs, and then we get to that reversal and we get time in a bottle. We get a reversal and we get a setup inside multiple different confluences that support that level. Does that make sense? See how we're digging through this thing now? Inside this order block here. So I want to see if this just gets tapped. We're at 10. There's the squabblers going on now. Yeah, I'm gonna break for lunch now. Oil and a nice short. Let's just go through these and then I'm out of here today. It's lunch hour. I'm not giving my money back at lunch hour, so we could get another run all the way back down to what Hadi was looking for on this 4-hour chart. Just so you know. Um, 4-hour chart. Remember that upside objective we're looking for at, sorry, up in here. We pull back into this range, these guys here, and we pull back into them at 620. 620 put us right back in this guy. Right there. And then if we start to run back lower, he's looking for here. Look at that as the next potential 4-hour inversion. So look for a run on all this liquidity. It will come down and stab that right in the mean threshold of that candle, which happens to be this inversion here. So if we get another launch through here, which is 12 o'clock reversal, right back in the levels we were looking for, and you've got your setup, and Abs has got his thing. Now you want to see we've come back into this last two up close candles, takes out that low. We've come back, stabbed them. Now let's see if we can see this now start to drive all the way back down for that level right here, which is also inside this range, the hourly. And you'll start to see where these confluences start to come to fruition for you. Oops, right there. That is the hourly inversion. Also a fair value gap busy here. Okay, so that's the downside objective for me for after lunch. So from the 12 o'clock turn for the next 2 hours, I expect to see a run down into a 2 o'clock reverse. And if we blast through this, we get through this level, I'm looking for this level. So if we get two big down hourly candles that drive through here into here, you're welcome. Anyway, that's what I'm looking at. That's what Hadi was looking at for a 4 hour. I'm sure that's what he was looking at. Let's look for these here. Natural gas, look at that. It literally ripped right through that. Shit balls. It's crashing. Gold, I'll get to that in a sec. So look at this one here. It hit our upside objective in wheat. That's the one we were first one looking for. Bang, hit it. Hit it today. Love it. Coffee. We want to see it get on top of this, start to go higher. We see it retrace to here. It actually retracing deeper. So now we're below that level. You're deeper inside this range, 50% or more. Fair value gap sitting right there. You're in here. So you're just looking for any opportunity now to catch a reverse or change in direction. Then find support and keep going higher. If not, look for this consolidation to get re-tapped back at 199.42.5. Cocoa, looking for cocoa to run into 10. This is what I want for cocoa now. Crazy for Cocoa Puffs. Look for that box. Corn hustle right there, 497. Oily oil. The greasy, slimy oil. Look at that. Came back into the mean threshold of that candle. So not only did it hit that thing here, so we did not get the reversal we were looking for, you see. I wanted to see us break through this level. See how we did not? We hit it to the precise spot. It hit it and then ran higher. Wow. So here, see how it traded below it? And then through this one as well. Trade through it, all the way back up into it, extend the range, lower, small little reversal, literally opened above it, traded back inside it, and then went higher. Reverse, 50% of that range. Oh, it didn't hit 50%. Left a portion of that fair value gap. Is that even... I want to see why that didn't go there now. Consequent encroachment of the busy. Gotcha. Went higher. Reverse. traded below it, traded back up inside it, extended the range, reversed, traded above it, went back inside it, traded back inside that range, right to the little imbalance right here is in terms of a premium array. We ran above it to that premium, traded through that level again on the downside, came back up inside it, went lower, took out this low, reverse, traded above it right there, or opened above it, came back down inside it, went up inside this range, right back to consolidation, CAM model 1, went lower, take this low out here on a closed candle. That body is now taken, that's taken out with a body. So you wait for a retracement back into here. Retraces all the way back up. Look at that. Bang. Hits it. Takes out this low. Bang. Hits it. Goes lower. So, yeah, interesting. I like it. Gold. Gold, gold, gold. Where's the reversal this morning? At, you see this reverse right here? Take out an old high. And at 11 o'clock on an important level, right? There's the 9 reverse. 10 continues going all the way up to 11 and then trades all the way down into 12 o'clock. Now I want to see a reversal at 12. If that doesn't hold, look for your reversal at 1400 hours. But here's the reverse right here. See that? Traded through it, came back, and it traded through a gap below here, this one, and did not take out the low. Traded back up inside that one. Body's respecting it. Then it finally takes out the low. So if you want confirmation, you say, yeah, it traded back inside that range. I want confirmation with market structure break. Remember, we talked about that was one of the rules that I failed to acknowledge this morning. Wait for the market structure break. Market structure break right here. Now retrace back into it. Now you can get short. So it's working down. Pull your fib tool from high to low. I got 27 people in here. So market structure break right here. Trade back in it. There you're in the premium level and you want to trade it at a discount. So as soon as it gets to 50%, take half your trade off. Hit 62. Pay yourself, comes back, you're out of your trade. Wait for a new setup. We have a reverse. We take out this high. Reversal. Trade through it. Right there. Trade back inside it. Right there. Short. Right off the 50% of that range as well. Continuation. Again, that's just looking for, if you're quick enough to catch these, the algorithm is functioning just as it should. All the way down to the discount array, premium array, discount array, box to box. That's boxing right there. From that box to that box. Have a nice day. Bitcoin. That's the level we wanted to see provide support today. And it did. It came back in here yesterday. Nailed it. Continued going higher. Took out the highs. And we're still going higher. So I gave you that one a couple of days ago. We wanted to see it get above it. It did. It found support at it. No bodies got back below it. So there's your continuation. So if you got in Bitcoin yesterday where it gave it to you here, you're banking dollar bills above these highs. Disney, look at that, hit that level. That is not some random freaking level I gave you there. That was right to the tick. This box, its high is sitting at 1154. This candle here, its high is 1154, 14. So perfect delivery. That is not randomness. That is not some shares, some random crap occurring in the markets. Oh, look at this. I gave this to my buddy the other day. I said, if it breaks above this level, look for it to go higher. Look at that. It needs to break here on a close to reach a premium. That's the notes that I sent him. It broke above there, came back, hit the premium. $19. There's almost $1. So you're almost getting 5% return on your money in one day. That's how you use stocks. You use this stuff on stocks. That's some annual annuity capital. I tell you, man, this shit works everywhere. Everywhere. Are these important levels? Freaking rights, they're important levels. Do they hold? Look at that, right to there. Bang, hold it. Now I want to see it roll over and come back down here some more. It came right back into that level we wanted to look at. It's got to get below here for us to continue this little price leg down. And it literally froze on it and popped back up today. So we'll see if this rolls over and comes down one more time. I want to see this all degrade in February here. But that's just me. I'm moving my price, my trade into profit now. This was at MicroStrategies. We have not got a body above here yet. Wait for your rule to change. You've got to get this wick above is not enough. You've got to get a body above that. That's the rule for me. Some people are okay with wicks. I like bodies. Look for that little level right there if you're into this MicroStrategy. Kevin, if you're still watching that. That's still not kicking out of there yet, hey? So I want to see this start accelerating. I want to see that accelerate. It starts to lose its luster for me if we just keep baffing around on this thing. It keeps mucking around inside here. I want to see price act the way I want it to. Oh, see, get right off of there. Canada dollar. Jeez. That just makes me sick every time I think about what our government's doing to our Canadian dollar. We have got second largest oil reserve in the world, and our dollar's going to shit. That's ridiculous. Japanese yen, still looking for that to pump higher. Silver, look at that, love it. Premium array, delivered, box to box. Box to box, took us a couple of weeks to get there. Actually took us from January 1st, the first trading day, till today. So the whole month it's taken us to finally get discount to premium. How many of you got scared off inside that? If you're trading on a daily chart, your stop loss, as soon as you hit 50%, moves to break even, plus your cost of your trade. Take half your trade off, and you wait. If you use the fib tool to trade silver, there's 50% right there. As soon as it gets to 50, half your trade is taken off. You move to cost of break even, and then wait. It doesn't come down and tap you, and then it hits 62%. You pay yourself there, and it comes all the way back down below 50% and takes you out because you move from here to here. You pay yourself at 62, comes back to here and takes you out. So that whole trade, just using the fib tool again, you would have paid yourself perfectly there, caught here, and it would have ran all the way back down into your discount array again, and you would have gone, I could take that and go long, start that whole trade all over again. I took it here, go long, take it here, go long, and you only had 3 or 4 more days to catch that for the run up. Hits 50%. take your trade, move to break even. That would have opened there. You would have gone, good, I'll pay myself. And if it reaches 62%, I'll move to 50. It hits 60, stop there. Never touched your 50%. So your stop loss is sitting here. You've paid yourself a portion there. And then it opened up here and you're like, I'm done. Again, that's the discipline of being able to recognize that and stick to your game plan. Lovely, lovely, lovely. So back to here again. You see how we retraced back up into that premium array on the 4 hour? And now we wanted to see it eat through here, and it's coming through. You've taken out a little low, so I've moved my stop loss now into more profit. And I've got a reversal happening on the 1 minute. So just to get my trade finished off here, if this breaks this level, I'm out of here. You see how you go from here, and I want to see box to box trading. I want to get back down here inside this larger range from here to here. That's my short-term goal. And if I can get through that, then my long-term goal is heading for these old lows down here, this previous low. So I want to see that low get taken, and I want to start seeing it march through here, because on the 4 hour chart, we've got a discount array right here. Burp, burp. Oh, no, that's an hourly chart. Discount array is right here. So see how we've hit the consequent encroachment of it already? I want to see it run right through, take that out, take all these lows out here, and just pop into there. So you see how we've run a low out? We've got a reversal happening. So this trade here fails for me, my fail safe, and this is the narrative you have to kind of build around this. When a low is taken, we look for this. If we trade above it and through it with this one as well, you want to see that break in market structure to the upside, and then we expect to see a continuation. Until then, I'm looking for a discount array down in here. We have not broken this to the upside. We've just got a wick that comes back and rebalances it, and then we continue lower. We come back into this breaker here that runs up higher. We just broke through it on a close, and we come back inside it, we tap it, and now we're going lower. So we don't have a reversal yet. We didn't even get above the first one. See? So now you want to see that continue pushing lower now. So you're fail safe. So you say, where's my stop loss? Is it still sitting up here? Do I want to see it retrace all the way back here and take my stop loss out when I've got profit in the bank and I want to pay myself? Pay yourself at that low? I am going to do just that. I'm going to buy one back. There. I got 3 lots on there now. Right at that low. So you pay yourself. And then if it trades back through this thing and takes my fail safe out, like this level gets taken. Well, if I trade above that on a close, I know I'm on the wrong side of this. We're probably got a retracement back into that side. At least that's my rule. And if I don't, and I get a continuation and I take out this low on a close, I expect to see this level provide support to keep coming lower. And then this order block here to provide support to come lower. And then my stop loss will move accordingly because it's my fail safe. If it fails, then I know I'm on the wrong side of it. And that's the confidence you have to be able to read your charts with a downside objective much lower. So anyway, I hope that helps you guys. I gotta go. I agree. You have helped me so much. I'll bring my friends here. I hope so, Chris. Just follow the rules, man. Do not be one of those guys that is influenced by all this social media. And it's really, TikTok was designed to screw with young people's minds. You're so influential that way. And that dopamine hit is so crucial. Do a little research on it. You'll see how there's tons of research. It's actually part of the DSM-5 now, which is the psychological and that psych assessment profile that psychiatrists use. And it's actually part of the DSM. So that whole addiction to a phone, which is the dopamine hit. It's not so much a phone, it's the dopamine hit that we constantly doom scroll and all that kind of stuff. Do not let that fight the man, fight the system. Don't buckle to that influence. Create your own destiny. Manifest your own destiny, Chris. It is yours for the taking, or it will be given to you. Which one do you want? Because what you're being given is a bunch of shit. What you want to make, what you create, what you manifest yourself, all starts here. Identify it, recognize it, decide you don't want it, overcome it. I'm here for you, but I can only say it and do so much. You got to do the work. Gold looks to be setting up short reversal on the 5-minute. Stonks OD. Darren, if order block was 1136, that means that institutional orders filled. Then why it goes lower? Institutional orders filled. You're starting to talk some retail stuff. 1136. Where am I looking for 1136? Why did it go lower? 1136, 1136. Why did it go lower? Okay, so as soon as you break market structure to the downside, you want to see this breaker hold price and come lower. So you look for a reversal and you look for this breaker. And if you don't understand what breakers are, again, study ICT stuff. You need to go through the core content at least a couple of times before you even decide to trade. If you haven't done his core content, you should not even be anywhere near a paper trading account. You should just be studying and watching and making notes and marking up your pages. That's all you should be doing. If you don't understand these basic core concepts, you're not going to get this. You're going to be chasing your tail, trying to chase whatever it is that we're doing here with no background knowledge. So you need to go through all his core content stuff. It's free. Don't pay anybody for any ICT stuff. Nobody pays anything here. It's all for free. I want you guys to learn this, get really good at this. I want to show you how to read price action so you get better at finding that ICT setup that he teaches you guys. That's all I want to do. And if you don't have the core basic content, I'm just going to sit here explaining order blocks and reversals and stuff to you. And all you're going to be looking for is one certain pattern, but with no logic or basis to ground yourself in. So understand his core concepts, study it. I know the content, but not the breakers or some small technicals. Well, the breakers is one of your first things he teaches you. So you don't have any of the concepts of the basic stuff yet. And I know he may be hard to listen to. I know he rants. I know he has these freaking moments where he goes off in left field and talks about all his tinfoil hat shit. So I understand. Go to this thing here, Chris. No, I'm not going to give you that because I'm not going to give you shortcuts. You got to do the work, man. I'm old school. You got to put the work in. You got to put the time in. There's no shortcuts. So go. We all had to put up with it. I had to put up with it. For 8 years, I've put up listening to him going on in his little rants. I loved it. I just went, carry on, man. This is hilarious. It gives me a few moments to quickly screen capture what you just said, go back, and I literally type out word for word what he said, and I make notes. See if I can find my. I don't have my binder here. I'll have to get my binder and show you some examples. But screen capture it. See how we're trading above this level here right now? And you got this one right here. So inside this range, this is the last little line in the sand I want to see it come to. And then I want to see it roll over and come back down again. I do not want to see it get back through here. So wherever my stop loss is sitting right here, and I paid myself below that low already. So you've already partialed yourself. And now I want to see, this is important. I want to see bodies getting above here. And then the last one is right here. So inside that small range from there to there, there's nothing above here that's the premium array other than the breaker that takes out these lows. So that's as high as I want it to go. If I start to trade into that with a body, I'm out. I won't even let my stop loss get taken. My fail safe is going to, I put my fail safe in here because I know as soon as the body gets above here, now I'm in a potential for a run back into here. And then if it reverses on me and goes back down, I'm okay with that. It's lunch hour, so I expect there to be a lot of crap going on here during lunch hour. You don't usually get a nice little run all the way back down. Lunch hour tends to go back and forth, so this could be 1 o'clock. I may run this out and come back down. Who knows? I know your content. So study his stuff, Chris. Put your time in, man. You don't get a free ride. Nobody gets a free ride. You got to put your time in like the rest of us. And we're putting in thousands of hours. If you want to make a career out of this, you don't do it overnight. And it's not just handed to you, man. Sorry. You got to do the work. Come here and we'll get you to use it every day. But otherwise, I'm going to be knocking my head against the wall because you don't understand the basic stuff. And you're just still trying to capture a quick, easy fix. And you ain't going to get it. It ain't going to work that way. Put the time in. Uncle D's telling you. Put the time in, son. You got to put the time in. Athletes don't get really good at what they do just because somebody showed them a trick on how to, hey, I can do this trick. They put the time in. They got up in the morning. They were working their asses off while their friends were out playing. They were studying. They were skating, doing drills every single day till they got really great. Nobody gets a free ride. Nobody. So anyway, share your notes, please. Young generation way of learning. Share my notes? Hell no. I'll show you what my notes look like, but I'm not going to share my notes. You want me to do the work for you? Hell no. You do the work. You make the notes. I'm not doing them for you. Share your notes. That's funny. The core content is great in terms of not having rants or going off topic. Very scripted. Watch them repeat times. It's true. The core content just covers his material quite well. I'll do it. Good. I think the website you didn't want to share. I think the website you didn't want to share is no longer available. The website I didn't want to share is no longer available. Oh, it's not a website. And it's not that I don't want to share it. I just thinking Chris is looking for a quick, easy fix. He's looking for, it's the disposable society, man. You want it all fast. You want it now. You don't want to wait. You don't want to work for it. You don't believe that hard work is, you can skirt hard work and you can skirt the, I'm out of this trade now. I'm ending it. And that ain't how it works. There's no free rides out there in the world. So AI, it's called ICT index.io. There you go. All that does is just answer all your questions, and it comes right from the horse's mouth. So if you go, what's a breaker? Type in ictindex.io, click on that thing, type in the question, and it will give you ICT telling you exactly what a breaker is. And you can study it that way, which is a ridiculous way to study all his material. Start from the core content. He doesn't rant in core content, which is an excellent point that Tristan makes. And he goes on to give you all the essentials you need. Then come here and I'll show you how to use it. But you still gotta come up with a setup, do the whole core content, all 12 months of it. Then Chris, come back and see me next year. If you're really dedicated to it, don't waste your time trying to catch up to everybody else and catch these trades everybody else is doing. Go away for a year, come back next year and say, remember me? I studied all this stuff like you said. But you know what? I know above you, just what I know of you now, you ain't going to do that. You'll find all the reasons to look for this because it looks like he's giving you the quick, easy solutions. It ain't going to happen, man. You got to do the work. That's all you need is YouTube. Old school, my generation is used to easy giving away. Yeah, your generation's very used to hand it to you on a silver platter. And then you still don't appreciate it anyway. Even when it's given to you, you don't appreciate it. Because you got it for free. You don't know the value of money till you have to pay. I looked at the groceries yesterday. We went out and bought groceries. It was $250 for the groceries. And I said, I remember when I worked for $2.95 an hour. It would have taken me 2 weeks of full-time work just to pay for this cart of groceries. That's how I go, wow, learn the value of $1 when you got to work your ass off just to put food in your mouth. But no, people just want, yeah, give me a handout, give me a freebie. I'm ranting, sorry. I'm not going to rant. You know how it is, Chris. If you recognize your generation is that way, be not that way. Do not do that. Because my generation appreciates hard work. And hard work is not just handed to you, man. You got to put the frickin' time in. Free Ride Club. Just kidding, Uncle D. The ICT Index IO is a great way to take notes. I mean, you still do the work of making your charts, but you can copy, paste verbatim what he says. I got that info from you, Darren. So thank you. You're welcome. Yeah, I literally took his word for word and wrote it down. I'm going to find my binder. Remind me tomorrow. I'm going to bring my binder here and I'm going to show you. And I've got binders full of notes. And I take them on vacation with me and I review them. And I go, oh yeah, I remember making that note. Oh yeah, okay. Oh yeah, I forgot about that. Oh yeah, that makes sense. Because after you've been doing it for a while, you go back and review his notes and you go, wow, yeah, that really is impactful. Because it's a career you want to make, not just some hobby. I want to make this a career. I want to make my career right now is to help you guys get really good at trading your charts. That's my goal, is just to get you guys going. I love guys like Hadi. I want to see more of you guys out there like Hadi that just, he knows what he wants. He's disciplined. He's got the extra thing that I can't teach you. And that's discipline and rules, a plan. He saw the plan. He drank the Kool-Aid and he's loving it. A breaker is a price structure that occurs when the market makes a significant move, typically breaking through a low or high and then reverses direction. This pattern often involves a sequence of price movements, a low followed by a high, then a low, and breaks the previous low before price rallies back. Now put that on a chart. I've given you 2 homework assignments now, Chris. I'm not giving you anything more. Do those 2 homework assignments I gave you. The second one is put a chart and mark it on a chart. And don't cheat by using ICT's. I want today's. Show me the breakers on these charts. Take a 1-minute chart and show me the breakers. And I'll understand that you understand what a breaker is. But mark them up on your chart and post that on the Telegram. That's your homework. But I came here for the signals. Jesus, can you believe it, Abs? Think about how many signals I give away for free here. It's nuts. Absolutely nuts. But whatever. If you understand his stuff, I'm giving you signals all day long for free. When I am profitable, I'll pay for your lifetime health insurance. Oh, bless your little heart, Chris. That's funny. I'll pay for your old man insurance. I'll keep you alive. Prop him up against the corner. Weekend at Bernie's. Keep moving his hand. Keep the signals coming. Oh, that's hilarious. All right, I'm out of here. I'm gonna go do some exercise. There's more to life than candles, you guys. Get out there, relax, enjoy your life. I'll see you guys bright and early tomorrow. I hope you got something out of this. And if you like this, hit the like button, because I only see 18 likes down there. I know I've given you some gold today. So hit the like button, subscribe if you're new to our channel, bring your friends, bring your mother, bring your father, bring your family, bring your pet. We'll teach them all. We'll help them all out. I'll finish going through the rest of these charts, and then I'm out for the day. Move to the sidelines and wait. Okay. Discount. Look at that nice discount box. Box. This box to this box. Wow, nice. Looking for 640, 6069. Looking for a retrace into this consolidation here. Mind you, we are above here now, so I like this reverse. We've traded above the breaker. We've back into that reversal. Now I want to see this take out these highs and start running back up into this premium box and this little guy way up here at 6091. That's sideways. I think I haven't already said we've already swept the lows here now. Today we swept these lows this morning. Reverse, body trades above it. You come back inside it all the way. Look at that perfect entry. Look at that. You can't ask for a nicer tick off the old block than right there. 44, 45. Starts to go higher. Lovely. I want to see this continue start to move inside this range now. So pull your fib tool from here to here. 50%'s already been hit. So if we can still climb above this candle or stay above this inversion, I don't want to see this low get taken now that you've got relative equal highs. Watch this level here and this little tiny discount array right here. We've just hit it now. You want to see it pop off of here and start coming back through here. Take out the highs, use this for support and this for support, and come back into that range. So box to box would be from these little tiny boxes, these inversions here, box to box. We'll see if we get that today. If you lose this on a downside, look for this here. And if you lose the mean threshold of that candle, we're obviously coming lower. We're looking for a dig into here. So Slightly bullish now until we take out that low. We've already hit the premium box already. Box to box, here to here. That range. You got the discount box. You traded above it right there. You stayed inside it. Left, hit the premium box. Box to box. Now if we can get above that, find support at that. You want this to hold now. Get above here. Find support at this and start marching higher. And I'm looking for gold to reach for here. That's the next upside objective in gold for me. Bitcoin finally took out all this stuff here. Get back into this breaker. It takes out these lows. Mean threshold is holding price, and that fair value gap's holding price right now. If this is the reversal, there's a little tiny box here. You want to see this get taken on the downside. Use this for support to come back into this range. And all I've got for you in here is if you're going box to box, and again, anytime I mention box to box stuff, also always keep in mind that this shit can change up on you anytime. And there's a bunch of PD arrays that you need to hit in order to get that internal range liquidity hunt. We've got to get below here. You got to find support at that. It's got to continue eating through this guy and then reach for this. So there's multiple different little PD arrays you'd be aiming for on the way down. Pull your fib tool, 50%, blah, blah, blah. The fib tool. Look at that. Oh, love it. Love it. Barclays. Nothing going on. Come on, pop up through here now. We can get through that. Now we'll set some new boxes for silver. We'll set some new boxes for silver. Boom. Reaching for this sell side liquidity here. Righty, that's it. Signals. Thanks, Steve, for the day. Hello, Chris. I hope your friends don't trade the way you do, else Darren's going to be on repeat for a long time. That's right. Yeah, bring your friends who are disciplined, that are going to read all the ICT stuff. Anyway, I'm out of here. Love you guys. Thanks for tuning in. I will see you guys bright and early tomorrow, or I'll see you on Telegram this afternoon.